Bitcoin market analysis. Insights into the current consolidation phase. As Bitcoin approaches $94,000, market participants are in a state of heightened anxiety. A sense of despair pervades crypto forums like Twitter, with discussions about whether the current market cycle has peaked. Some analysts believe there is a 20 to 25% chance that Bitcoin has peaked, with predictions of an 80% drop. Others predict the next major bull run will only come after a 2-year lull, citing historical trends of cyclical pullbacks. However, when we analyze the situation through the lens of past market behavior, technical indicators, and macroeconomic influences, it becomes clear that we may be in a classic bear trap phase, a critical point before major upside moves. This article analyzes these dynamics, providing a comprehensive analysis for investors and professionals navigating Bitcoin's volatile landscape. Structural overview. Recognizing bear traps in historical cycles. Bitcoin's price movements often conform to well-documented patterns observed in financial markets. Bear traps typically manifest when the market gives false bearish signals, causing many traders to exit prematurely. A rapid reversal then invalidates these bearish predictions, leaving short sellers caught off guard. The current consolidation phase follows this textbook pattern. Bitcoin's breakout to new highs earlier this year was followed by a retracement, creating the illusion of market weakness. However, when compared to historical data from previous cycles, such as 2017 and 2020, this retracement appears to be a natural and necessary component of sustained market growth. The case for persistent growth. Comparative study of Bitcoin cycles. Bitcoin's historical price chart shows an uncanny consistency in its behavior across bull markets. Each cycle has its own distinct phases: breakout, consolidation, rally, and finally a market top. During the 2017 cycle, Bitcoin retraced nearly 30% multiple times before peaking. Similarly, in 2020, Bitcoin has experienced a series of retracements within a broader uptrend. The current price action shows that Bitcoin is reflecting the following patterns. 1. A breakout to a new high by the end of 2024. 2. A consolidation period around the $94,000 to $100,000 range. 3. A potential continuation towards the $120,000 to $130,000 range by early 2025. One of the most reliable indicators in financial markets is sentiment. The current wave of fear resembles the March 2020 crash, in which Bitcoin lost 61% of its value in 3 weeks. While this downturn may seem catastrophic, it has set the stage for an unprecedented rally to $69,000 in 2021. By comparison, the current pullback from $108,000 to $94,000 is modest and does not indicate structural weakness. Why market fatigue is misleading. The long-term nature of Bitcoin cycles often leads to investor fatigue. Many long-term participants who have lived through multiple cycles of volatility are keen to declare the current phase a peak. However, this sentiment often coincides with the final stages of consolidation, when the market prepares for a new bull run. The involvement of institutions further differentiates the current cycle from previous cycles. Unlike retail traders, institutional investors are less reactive to short-term sentiment and are actively accumulating during market pullbacks. The Federal Reserve's monetary policy remains the cornerstone of Bitcoin's macroeconomic environment. Recent signals of a pause in interest rate hikes have been met with mixed reactions. Historically, periods of quantitative easing have been strongly correlated with Bitcoin bull markets, as increased liquidity flows into high-growth assets. The Fed's dual levers, adjusting the effective interest rate and forward guidance, play a key role. Even without an immediate rate cut, dovish guidance could stimulate risk-on sentiment, indirectly benefiting Bitcoin. Why a rate cut cycle matters. If the Fed embarks on a sustained rate-cutting cycle, Bitcoin would benefit significantly. Lower interest rates would reduce the opportunity cost of holding non-yielding assets like Bitcoin and increase the appeal of alternative stores of value amid concerns about currency devaluation. Institutional adoption. The 2024 to 2025 cycle is characterized by unprecedented levels of institutional participation. Asset managers such as BlackRock and Fidelity are actively lobbying for Bitcoin ETFs, which, if approved, would unlock trillions of dollars in potential inflows. Institutions also use longer investment horizons, which helps to reduce market volatility over time. Bitcoin ETFs would act as liquidity catalysts, allowing institutional and retail investors to participate seamlessly. The increased accessibility provided by ETFs would likely drive sustained demand, creating upward pressure on prices. Consolidation periods allow the market to rebalance and attract new participants. These periods prevent overextension, ensuring that price increases are supported by genuine demand rather than speculative excess. Significant sideline capital is still ready to re-enter the market. Native crypto participants who exited at $108,000 are likely to reinvest as Bitcoin proves resilient. Additionally, institutional buyers are strategically accumulating, creating a stable foundation for the next leg of the rally. Future forecast. What's ahead? 1. Short-term volatility. Bitcoin is expected to remain in the $90,000 to $100,000 range. This period will facilitate liquidity absorption and new capital inflows. 2. Medium-term growth. With the anticipated ETF approval and the Fed's dovish stance, Bitcoin could target $120,000 to $130,000 by mid-2025. 3. Long-term outlook. Over the next 2 years, Bitcoin's scarcity and growing institutional demand could push the price to $200,000. External factors, geopolitics, and the Trump administration. The possibility of a pro-Bitcoin administration in the United States, potentially under Donald Trump, adds another layer of appeal. Trump's previous term was marked by stock market growth and deregulation, which could translate into favorable conditions for Bitcoin. Broader shifts toward automation and decentralized supply chains also align with Bitcoin's nature as a decentralized asset, cementing its role in a rapidly evolving global economy. Bitcoin's current market phase is a testament to the cyclical nature of financial markets. While short-term pullbacks can be unsettling, they are an integral part of long-term growth. By focusing on historical patterns, macroeconomic influences, and institutional trends, investors can gain clarity amid volatility. For those willing to take a disciplined approach, Bitcoin's potential as a transformative asset remains as strong as ever. The key is to stay informed, manage risk, and recognize opportunities amid uncertainty. Bitcoin's role in the broader digital asset ecosystem. As we consider Bitcoin's trajectory in the evolving digital asset ecosystem, it is important to recognize its status as both a store of value and a benchmark for the entire market. Bitcoin's dominance continues to influence sentiment across alternative cryptocurrencies and emerging asset classes, such as tokenized real estate and decentralized finance, DeFi. Its liquidity and network effects make it a preferred choice for institutions entering the digital asset space. A window into market health. On-chain data provides valuable insights into the fundamental health of Bitcoin. Metrics such as exchange flows, wallet activity, and the growing dominance of long-term holders suggest that the current consolidation is far from a market peak. For example, the strike price, the average price at which coins have most recently traded, is still below the current price, indicating strong demand from long-term investors. Risks and catalysts ahead. While Bitcoin's potential is huge, risks remain. Regulatory uncertainty, particularly regarding the classification of digital assets, could cause volatility. Additionally, macroeconomic changes, such as unexpected hawkish moves by the Federal Reserve, could temporarily stifle growth. Conversely, emerging narratives, such as Bitcoin's role as a hedge against fiat currency devaluation and its integration into sovereign wealth funds, highlight its growing adoption. If these trends accelerate, Bitcoin could enter a period of exponential growth, with a price target of $200,000 or more becoming feasible in the medium term. By maintaining a balanced perspective and leveraging data insights, investors can effectively position themselves in this rapidly evolving market.